Did you know that the first coins were made over 2,600 years ago? That's before the Roman Empire. Finance is not new. Its story is full of genius ideas, dramatic crashes, and incredible comebacks. Let's go back to the beginning. Around 3000 BC in ancient Mesopotamia, people stopped relying on barter. Instead, they used silver as money, silver coils that you could clip pieces off. Then, around 650 BC, King Croesus of Lydia stamped the first official gold and silver coins. A king's seal guaranteed their value. Trade exploded. Finance had its first revolution. Fast forward to medieval Europe. The Knights Templar, famous warrior monks, invented the traveler's check. You could deposit money in one city and withdraw it in another. Later, the Medici family of Florence built modern banking, double entry accounting, loans, interest. But the real game changer came in 1602 in Amsterdam. The Dutch East India Company became the world's first publicly traded company. Anyone could buy shares. And with that, the first stock exchange was born. Speculation led to manias. Tulip mania in the 1630s saw single bulbs cost more than a house. Then it crashed. In 1720, the South Sea bubble in England wiped out thousands of investors. But from every crash, finance learned and grew stronger. The 19th century brought steam engines, railways, and factories, all funded by investors. Railroads needed huge sums of money. Ordinary people could now buy shares and bonds. This also created the first derivatives, bets on future rail lines. Some made fortunes, others lost everything. But the infrastructure that built modern nations came from this financial engine. By 1900, Wall Street had taken over as the world's financial center. Then came 1929, the Great Crash. Stock markets collapsed. 11,000 U.S. banks failed. The Great Depression followed. In response, President Roosevelt signed the Glass-Steagall Act in 1933. It separated risky investment banking from safe deposit banking and created the FDIC to insure people's money. After World War II, world leaders met in Bretton Woods, New Hampshire. They created the International Monetary Fund and the World Bank to keep currencies stable and rebuild global trade. For 25 years, the world tied all currencies to the U.S. dollar, which was backed by gold. But in 1971, President Nixon closed the gold window. Currencies would now float freely. That changed everything. The 1980s brought computers to trading floors. Derivatives became more complex. Physicists and mathematicians called quants built algorithms to trade faster than any human. This created enormous wealth, but also hidden risks. In 2008, those risks exploded. The subprime mortgage crisis collapsed the global financial system. Banks had to be bailed out with trillions of dollars. Out of that crisis came Bitcoin, a digital currency without any central bank. Blockchain was born. Today, artificial intelligence and mobile payments are rewriting the rules again. From silver coils in Mesopotamia to AI on Wall Street, finance never stops evolving. The story is not over. It is just waiting for the next chapter.